In this video lesson, we'll be discussing the strategy of buying and shorting through large size. It is very common to find large size on an NYSE stocks limit book or an ECN, such as ARCA or NASD. Depending on the daily volume of the stock and the nature in which it trades, a stock can have numerous large limits at various prices or just one at a specific price. It is that stock that has large size at one specific price that we are interested in, as it is most common to produce highly profitable setups, very similar to those at a figure. Like the actions that occur when large size is at a figure, large size at random prices can also create a level that divides traders on what will occur next. Some believe the large size will be printed through, triggering a breakout, while others feel the large size will hold firm, creating an impenetrable level, causing a reverse in trend. Therefore, buying and shorting through large size at random prices is similar in comparison to buying and shorting through the figure. However, one must use a much more discernible filter in order to decipher which size, when broken, will actually have an impact on the stock price. The key to deciphering is to compare the stock chart to the stock price in which the large limit order is at. Look for any apparent technical importance, such as a significant level, trend line, or moving average. If there is a technical correlation with the large limited size, then there is a much higher probability for successful breakout if and when the stock completely filled. Let's use the following example in order to get a better understanding of this strategy. Here is the hypothetical price action of a stock with a large buy limit order of 20,000 shares at $42.63. The 20,000 shares is a large limit order for this stock because its average daily volume is roughly 2 million shares, and there is no other limit orders anywhere near its size visible on the NYSE limit book or ECNs. As a result, this large size at $42.63 has created a major point of interest, especially as it has placed itself at a key point in the chart, directly on the trend line. If the large buy order of 20,000 shares is able to hold at $42.63, the stock will bounce up and most likely continue its current trend. This bounce occurs due to a combination of events. Shorts, who were attempting to reverse the trend, cover as a large size appears too formidable to penetrate. Moreover, longs, who believe in its strength of the trend, buy aggressively. Thus, between shorts covering and longs entering, a healthy bounce occurs as the large size holds the stock price up and gets the stock to head higher once again. However, if the large size of 20,000 shares at $42.63 successfully printed through, then the stock will break down and reverse trend. Those long the stock will exit as the large size, which was acting as support, is eliminated. Moreover, shorts will aggressively look to enter as the stock reverses its trend. Let's take a look at a few examples to get a closer look. Here we see a snapshot of Dean Foods, ticker symbol DF, taken literally 1 second after a large buy limit order of 10,000 shares at $24.37 was eliminated in 3 block prints totaling the full 10,000 shares. This large buyer, which was acting as support, is now no longer there to hold the stock price up. By taking a look at the stock a few moments later, we see how the stock begins to fall as the breakthrough support has created a sign of weakness. It is that instant separation or spike away from the point of interest, which in this case is $24.37, that confirms the importance of the break. In this next snapshot, we see Dean Foods continuing to break down to new lows with every downtick. The sudden lack of buying interest should come as no surprise, as a large size that was aggressively printed through at $24.37 signifies serious weakness, which entices shorts to enter and causes buyers to back away. Moving on to this next example, we see retailer J. Crew, ticker symbol JCG, at its low for the day at $28.35. At that price, there is a very large buy limit order of 48,300 shares on the NYSE limit book, which is creating a level of resistance in which the stock had successfully bounced off an earlier move in the trading day. By looking at J. Crew a few minutes later, we see that not only has the stock managed to hold firm, keeping its 48,000 shares intact, but it now also has a crowd buyer of 10,000 shares as well. Remember that NYSE crowd can be found by identifying discrepancies between the size appearing on the NYSE tape and the NYSE limit book. In this example, the bid on the tape is showing 58,200 shares, while the limit book is only showing 48,200 shares. The 10,000 share NYSE crowd buyer is at $28.35. It is important to note that while the crowd buyer has joined forces with the large buy limit order, NYSE crowd is always last to be filled at every single price. Therefore, should enough sell momentum quickly eliminate the large buy limit order of 48,000 shares, the crowd buyer will most likely cancel the order and back away, avoiding the freight train of sell orders taking out bids. Now let's take a good look at how the tape appeared when sellers finally mustered up enough momentum to actually print through the large buyer at $28.35. By looking at the tape, we can see that at 3:21 and 50 seconds, the first real significant transaction takes place at $28.35 for 10,000 shares. This reduces the large buy order to, at the time, 43,000 shares. After a slew of more transactions occurring at $28.35 over the next 3 seconds, the large buy limit order is reduced to less than half its original amount. This barrage of sellers quickly and aggressively taking out the large buyer with big block prints is an indication that a breakdown is likely imminent, and this is when the opportune time to enter short would be. With momentum building and a break only seconds away, it is best to be proactive and enter short as the stock is breaking, instead of choosing to wait till afterwards. While waiting until after the stock successfully breaks below the level of support may increase probability of only entering into a successful break, your entry will often be less desirable as slippage will commonly occur due to the large amount of orders flooding into and out of the stock. Therefore, if you can enter as the stock is breaking, do so and forego the risk of entering at a price further away than desired. Continuing with our J. Crew example, we see that the price has dropped 15 cents within seconds of breaking through the support level created by the large buyer at $28.35. This quick breakdown is a major sign of weakness, which gives shorts the confidence to enter and causes longs to seek exits. Taking one more look, a few minutes later, we see J. Crew still is in its downward trend as it continues to move the stock lower. The probability, low risk, entry point through the support level at $28.35 is now 35 cents in the money per share and growing with every downtick, as no new support level is within sight. So, to sum up the act of buying and shorting through large size, it is all about identifying a point of high interest in which large size is parked at that coincides with some sort of technical significance, whether it be a support or resistance line, a trend line, or a moving average. Simply spotting large size is not enough to warrant entry into a position. It must be where buyers and sellers are divided in what will be the next major move in the stock, a bounce and continuation of trend, or a break and reversal of trend. Regardless of which occurs, the practice you will be able to successfully participate in is a high probability trading setup that arises of buying and shorting through large size at critical points.